Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, November 14, 2008. In Germany, October's final release of CPI confirmed the preliminary release showing prices easing 0.2% on the month, while the annual rate also was unchanged from preliminary estimates of 2.4%. Prices are easing for consumers as the decline in commodity prices filters down to them as companies try to move inventory ahead of a holiday season with a grim outlook in sales. Finalized inflation data from the Eurozone also matched preliminary estimates. The annual rate has eased to 3.2% after peaking at a 16-year high of 4.1% back in June. Data today also showed that the Eurozone has slipped into its first official recession since the bloc was created in 1999. After contracting in the second quarter, the economy shrank again in the third quarter, with the GDP repeating the decline of 0.2%. Though the economy grew 0.7% annually, the two consecutive quarters of negative GDP growth pushed it into recession as defined and pressured the ECB to continue to cutting rates in December. After surging yesterday, the euro-dollar reversed course, falling from its high near 1.2850 to set an intraday low near 1.2610, about a 240 pip swing. From there, recovered to trade near 1.2750 during the New York afternoon session. The pound dollar, which has been plummeting this week to the tune of 1,200 pips, finally found some support after setting a fresh 6-year low near 1.4560 yesterday. Today saw the pair trade sideways to end the week. Retail sales in the U.S. dropped 2.8% in October, the largest decline since records began in 1992. Sales excluding autos were down 2.2%, which was also the worst drop on record. The sharp fall this month is the fourth month in a row that sales were negative as the U.S. economy starts the fourth quarter in dismal shape. Consumer spending will continue to be restrained as long as the job market continues to deteriorate and the value of stocks and home values leave Americans feeling less wealthy. With petrol prices sliding 18.8% in October, the import price index in the U.S. fell 4.7%, the largest fall in import prices in nearly 20 years. The last three releases have seen 3 of the 4 largest declines in the index since first published in December of 1988. The sharp declines reduced the elevated annual rate to 6.7% in October. It had been 20.5% only in June. U.S. business inventories fell by the most in 3 years in September as firms did not replenish stocks as they saw sales plunge and the economy outlook continue to deteriorate. The Reuters UMISH measure of consumer sentiment increased to 57.9 for the first half of November from the 57.6 seen in October. The rise was a result of a better reading for current conditions and lower inflation, while future expectations declined. After a strong rally yesterday, U.S. stocks returned to its defensive pose, falling on the wave of negative news concerning consumers. The Dow Jones Index was down 250 points at noon time. The loss of risk appetite brought the dollar-yen pair to the 96.10 level, halving yesterday's rise. However, the dollar managed to stop the bleeding at that point and was trading around the 97 level in the afternoon. In Canada, manufacturing shipments defied expectations of a 1.7% decline and rose 0.1% in sales. The results were mixed across the different sectors, with 13 of the 21 industries reporting gains. Economists had expected a decline in August to continue as the U.S. economy slows and demand weakens. This is somewhat reflected in the 3.6% decline in new orders after declining 1.7% in August, and a 0.3% decline in unfilled orders after a 2.8% gain in August. In a separate report, sales of new motor vehicles rose 2.5%. With evidence mounting towards a deeper global slowdown, with several main economies already in the throes of recessions, the Canadian dollar fell against the U.S. dollar after rising yesterday. Speculation that a slowdown will limit demand for commodities such as oil pressured the loonie. The greenback rose above 1.23 and was trading near 1.2250 in afternoon New York trading. Some key releases to keep an eye on to start next week include GDP and services activity data from Japan, retail sales from Australia, and housing prices from the UK. And that wraps up this week in the Forex markets. Thank you for joining us here at CMSFX.com, and have a great weekend.